Hey, welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a great day here so far. All is going well. This is just a quick stock market update show that we do to, cover the stock market. The good, the bad, and the ugly. We'll go over that. We're also playing a game. If you want to play along, you go to the jazzwealth.com/guessthedow. If you want to take a shot, where do you think the Dow is going to close next week? At the end of the week there. If you're closest without going over, we'll give you $100. You probably deserve more, honestly, if you can really guess the Dow. We should come up with some special treat. Like if you actually guess it perfectly, there should be something special there. Sadly, thanks to regulations, I'm only allowed to give out $100 in any one spot or accept anything of $100 or less in value. So we put it right at $100. But anyways, if you guess it, I'll shout your name out on the show and everything, say hi to your kids or whatever you want, something silly. Anyways, take your guess. Go have fun there. It's not a marketing game or anything. You just take a guess. If you're close without going over, we'll alert you. Announce it on Fridays here with the show. Won't send you one other email, I promise. And if you're one of our customers, I can credit your account, even if you've maxed out your Roth IRA there. Anyways, we got a class coming up on Thursday here for our customers. We have it's something we do every Thursday. We just do a class. We get together, kind of share what's going on, teach you something new. So you can check out the events there on the website if you'd like. Well, let's talk about the stock market. You got the Dow losing 120, the S&P losing 9, the Nasdaq losing 26. The market's just confused here and running out of energy. We made a real solid point to try to describe this to you yesterday. Maybe I'll go over it again, but there's no real leadership in the market. You look at utilities, you look at consumer staples, and you look at REITs. That's it. Every day I keep saying the same thing. That's not enough to move the markets to new highs. We need everything else to come along and play, or at least a few other areas. So really tough there. And so because of that, every day you're just seeing a little bit of deterioration in the overall markets. And we'll cover some of that here to go through different sectors there. Seeing it all over the news today. It was sort of a slow news day, actually. So they were focused on the 30-year now trading below the overall yield of the S&P. I was just getting ready to do a video on why these lower bond rates are not really a good thing in general. And there go the TVs. So was just going to cover that to kind of explain like what happens, because we did this about 2 years ago. Probably going to do another video on that just to explain. It's not good, but now basically you are forced into the stock market if you want a higher yield overall than the bonds, which means you're forced to take more risk, and it's just sort of frustrating there. But anyways, that's what you have going on in the market. So you're going to hear a lot more about that, the 30-year bond coming in there as well. You have the 10-year, 2-year versus the 10-year inverted at the moment and actually staying there. That's been building steam to the inversion side. I don't know if there's another way to say that. But that's not looking good there. That's also giving more people sort of that focus as to are we going into a recession or not? And I'm going to do a video on that and actually show inversions with the actual recession so you can sort of see for yourself when the inversion happens and then the inevitable recession happens, because it's pretty much happened every time. What sort of time frame do you have? What are you looking at? So we're going to make sure to cover that for you as well. But now, for today, you just want to know 10 to 2s are inverted. You've got that inverted yield curve there, not looking good there. So let's go over to the stock market here. Let's just dive in. We'll look at the S&P 500. There you go. Like I said, I'm going to leave this 10% pullback line on here. Just, I'm not telling you what to do or anything. I just think it's going to be an important number that we look at, You got the series of highs up here. Everybody's looking at the same spot. Wouldn't normally be a problem if we were above resistance, meaning we were above very popular moving averages. That's the blue line on my charts here, which is the 50-day moving average. We can't even get back above the 20-day moving average on a day where everyone is just able to focus on the markets. There wasn't really a lot of tweets or China news early on. Yeah, China said, we actually didn't make any calls. We're not sure what calls President Trump's talking about. We don't have any here to relate to. They also had some other news that they were going to further strengthen their economy so that they don't have to bow to the U.S.'s concessions, apparently. So you got a stock market that basically shrugged that off early, and we really could have got something done, but everybody says, well, I don't know what to do, right? This is a weakening market in general. There's no real exciting place for them to go. So the S&P 500 really worry about this thing pulling back. If you're a longer-term investor, you're actually excited about that, right? You kind of want this to pull back. Give me a discount there. Let's get it over with. But in the short term, the underlying statement here is there is just deterioration. Right? That's it. If we could just pick one word, deteriorate. We could just pick one word, deterioration, broadly across the markets there. Not crash type weather. It's not, the end of the world type weather. It's just deterioration, which leads to pullbacks unless President Trump feels like tweeting something that turns out to be true. We'll see what happens. So you got Philip Morris in the news here today. They're going to partner with Altria. This would be the biggest merger all year, if I don't even know, maybe in the last 5 years or so. These are the two big tobacco companies. You got Philip Morris and Altria. Ticker symbol's MO if you want to look at Altria. So they were pretty active here today. They want to just merge as equals. There's no buyout. There's no like, hey, you give us some money and we'll just take over your name. They want to merge as equals and join one big old company there to take over the tobacco world. And so you have that sticking out in the S&P. Also in the S&P, you got Newmont Mining that was higher due because of gold. You had gold that had a good day here today. The gold miners did well. Gold in general continues to build up a little bit of steam. That's what we talked about today in our earlier video today. So in general, just nice and strong, looking good here in the short term. So Newmont sticks out. You also have Smuckers. There you go. Smuckers lower by 8% on the day. They reported earnings. They missed on earnings overall. Actually, yeah, they missed on earnings, missed on revenue, lowered guidance, and they tried to blame it on dog food. They sell pet food, and it didn't go so well. Sales are lower. Yeah, they do that, by the way. They sell pet food. They sell jams. They have all kinds of different brands. A lot of people don't focus on them as a dog food company, so maybe that caught some people off guard. In the Dow, you got the same deterioration, right? Right around the 200-day, under the 50-day, a little weaker than the other indices besides the Russell, and we're deteriorating, just looking weaker and weaker. The market's saying, okay, we have nothing left to do but take risk off if we don't know what our true risk is going forward. That's sort of an odd spot to put the market in. UNH selling off here. This was our relative weakness example that we covered for you guys, well, going back like 6 days now to show how to find those, right? How do you find stocks that are like poised to move lower, poised to move higher, the ones that are in that kind of good shape? Costco would be a good one to the upside, Microsoft even still. But to the downside, we had UNH here. Very aggressive sell-off here today, 3.5%. Didn't that kind of, do you option people, right? Where's my option people? You guys out there? Any option traders out there? Didn't you kind of just want to look at that one today and go, all right, well, where could I go? 210 puts, if I sold some 210 puts there, I got a 25% chance of being wrong. I'm not telling you what to do, but like, didn't that excite you a little bit? So UNH, a little bit of a waterfall drop there. You're getting 2.25 basically to sell puts down there if I'm talking to anybody that cares to talk about that. There you go. Anyways, so you got that one going on there. UNH lower, so in the Dow, that was a focus. I want to point out the banks real quick. JP Morgan lower on the day. Goldman Sachs lower on the day, just by a little bit. They just, no energy. There's no energy for these financials. The big guys, the big financials right now, it just kind of missing out there. Johnson & Johnson higher by 1.5%. They're just enjoying the case sort of being over there with the $572 million that we covered yesterday. Lots of news on that front in the Ohio case today. Verizon, we just talked about this one. We got this sloppy little downtrend here, or whatever you want to call it, wedge, whatever, triangle. Breaking above there today, showing a little strength yesterday. It's sloppy. You know, it's not perfect if you're a technical trader there, but Verizon's sticking out, trying to show that it's got a little bit of strength for you. If we go over to the Nasdaq, I'll use the QQQ to highlight that one here today, also leaving the 10% drop number on there so we can see going forward. Deterioration. I mean, just get tired of me saying that. I'm going to just move on so I don't say it too much. But in the NASDAQ, you have Workday. So Workday showing some real weakness here at the 200-day moving average. Typically, the 200-day, although people would want it to be flat, people look at the 200-day and say, that's an area of support. Maybe there's a good buy off that 200-day. And anybody that did that has yet to see any real profit from it. Well, those people lose interest after a while, and you have what is now a bunch of people going, I'm not so sure about this stock. I'm not so sure about this sector. I'm not so sure about this stock market. Maybe that's not going to be support. You get that mindset just building day after day. Go down here at the bottom. What do you have? You have volume building day after day. Notice the down days are very aggressive. You don't see massive up days here. So you have people just saying, all right, well, I think I'm just going to bail out. I took a shot on a trade. It didn't work. So you have that sort of feeling, that momentum building there. Did I say Costco a minute ago? Costco looking really strong there, 5% exactly on the day. They had a new Chinese store open. I believe it was their first one, and the line was so bad. There were so many people there, they had to actually close the store. It made me wonder, do they build bigger Costco stores there because there's more Chinese in their population there, just in these dense areas? Is their store like twice the size of a Costco here? Or did they think about that? I don't know. I can't say for a fact if they did. It just made me think, like, there's that many people there. We knew that already. Kind of interesting. Anyways, the stock was higher by 5% on the day. In the NASDAQ here, you got J.B. Hunt, one of the transport names in the NASDAQ. That one sort of sticks out, showing off a little bit of strength there. Here in the sort of midterm, if you're looking back a few weeks there, it could just be that people are looking for exposure to the transports, but not necessarily with China involved. So you got that going on there. All right, if we look at the bonds, so we talked about the yield curve being inverted. Here's the TLT. Gave you some stats on that yesterday. Only 3 out of the last 10 years has the TLT shown a positive gain over the next month. Actually, month minus a few days there. And so we mentioned yesterday that'd be a warm welcome for those of you that want the markets to go higher, because right now bonds moving towards zero. It sort of feels like that pressure's building there. Interestingly, over the next month, biotech, did I mention this yesterday? Biotech is been positive every single year for the last 10 years, I believe since the last 12 years, if you go back, over the next month, right? So this little month's worth of time here, if you looked at this stretch of time this year, and you go back, all right, last year, what did this stretch of month look like? Year before, and so on and so on. Biotech is the only one that is actually positive for the last 10 years. Regional banks looking lower here, deteriorating, right? Key word, deteriorating, just looking weaker and weaker. That sector lower on lower rates. We look at the price of crude oil, that was higher finally today. This thing trying to break out here of this little range. I drew the lines there just so you have them, something to look at. We've been talking about that upward pressure. I mean, as every time it goes up there, you've got this ceiling that it's pushing up against. And today was a nice move to sort of get people that watch it on a watch list to say, maybe I should come back and keep an eye on this, right? You notice how we haven't talked about it here for a few days? So you go, all right, it's just weak. It's just selling off. Let's see if it goes down, then maybe comes back up and tries it again. So now that you've seen that sort of blast off day, I mean, 4%, nothing to really sneeze at there. Now that you've seen that sort of thing, that draws people to look back. That brings your watch list back. If you have alerts set, hey, let me know next time oil goes back to some level. Well, now it's back to that level. You're paying attention if you like those sort of technical patterns there. So that's crude oil. I'll just point out a few others. I mean, I'm just saying the same thing every day, really, with this market here. You got retail, lower by 1.25% on the day, just continued weakness. There are so many names. Macy's was back on the 52-week low list today. Limited Brands back on the 52-week lows there. You got names like Kohl's just hovering, hinting, wanting to break to new lows there. And so because of that, just broad-based. If you're not Target and you're not Walmart, you're just not doing real well right now. In the short term, right? So you got real weakness there in retail. Transports moved all the way back to that 10% level. We talked about that the other day. This would be the third time it's moved back there in less than 2.5 weeks. Well, let's just call it less than 3 weeks. Not a good sign there. If you break below the 10% level, which also happens to be support in this area, you have every reason to believe that people will want to push this one lower. It just seems like a good short-term trade for people that want that to break. You'll also stop losses from people that said, I'll buy when it drops 10%. It bounced a little bit, and now it's come all the way back, and they go, shoot, maybe I was wrong. I'll tell you what, if it goes under that level, I'll just get out, take a small loss, and move on. That's what you have going on there. In general, you have real weakness just stretched across the board, just real tough. We didn't cover healthcare, but look at that weakness there. Just overall, you got the resistance ahead. We've got this sort of support trend line there, and it just not giving you that warm, fuzzy feeling that everything's just going to bounce off of it. We're all going to have candy and dance around in circles, and it's going to be great. Russell 2000 trying to break below this area here as well. Russell 2000 was a big loser today, 1.5% lower on the day. For the last 4 weeks in a row, it has lost at least 1% week over week. We are now going on the 5th week where it is already taken care of that. So if we just finished here, that'd be 5 weeks in a row that we've been able to close below. This is the most ever. The most that it's lagged behind the S&P 500 in the last 10 years. So overall, you could just see if you had to pick an index that was weak, discounted, maybe in for a little bit of trouble, and you like that sort of thing, that gives you at least something to look at there. All right, in the S&P 500, stocks that are over the 50-day moving average, only 33%. I haven't mentioned it every day because we've been hovering in this area between 25 and 35% of the stocks above the 50-day. Not bad. There's really nothing to glean from that, so it's just like, it's what it is. Just been floating around here, and that's largely because you got REITs, you got utilities, and you have consumer staples still holding up their end of the bargain. Although, did you see General Mills today? Was it General Mills? Yeah, General Mills breaking below the 50-day, so that's another one off the list there for consumer staples, if you happen to follow that. Yeah, 29 new 52-week highs today, but 17 of that 29 was either REITs or utilities, so it's not really all that exciting. You had a couple consumer staples in there. Well, just the sort of strong ones there, the all weather or whatever you want to call them. You got Coca-Cola up just a little bit, hitting new 52-week highs. That always makes you want to check Pepsi. Pepsi hit new 52-week highs as well, so looking good there for those two names. You had 36 new 52-week lows. Unfortunately, 7 sectors of the S&P were represented in that list there. Broad deterioration, right? Deterioration. That's your drinking game question or word of the week. Last week was Jackson Hole. This week is going to be deterioration. Try to keep up. All right, so you got that going on. TripAdvisor, we talked about this bleeding down towards the next support area, which is around 35, between 35, 34.50 in there. You also had a lot of big names on the new 52-week low list. You had American Airlines, Harley Davidson, yeah, HOG is the symbol on that one, Alcoa. You had E-Trade. I don't know if that's a big name in the grand scheme of things, but, oh, sorry, I typed it wrong. You got E-Trade moving to new lows there as well. FedEx, a big name, moving to new lows, right? New 52-week lows anyways. Carnival Cruise Lines moving to new lows. Just showing you the diversity in that 52-week low list, right? CBS, broadcasting company, and I think I said American Airlines already. So, holy cow, right? I'm trying to paint different pictures here for you so you can see it's not the end of the world. It's just people taking risk off at the moment. And if you see some nastiness to the downside, you sort of, would be all right with that. It would be expected. You would have seen it coming, right? I like to point these things out ahead of time when I can. All right, a couple things, and then I'll take your questions if you have any. It's not really much else to cover here today. You've got earnings tomorrow from Coty, C-O-T-Y, Box, it's Dropbox's competitor, Five Below, Guess, H&R Block, Ollie's Bargain Outlet, which was my thing from yesterday. Didn't know they were public. PVH and Williams-Sonoma coming out tomorrow with their earnings. Big retail focus in that there. What else? Papa John's brings in the CEO from Arby's, former CEO. They're excited about that. Facebook developing a messaging app inside of Instagram. Doesn't that exist? I don't know. Can't you send a message in Instagram? I'm missing something. And that's it. Morgan Stanley, I believe they upgraded. No, they did not upgrade Costco today, but they said Costco is going to do well with this China as far as overall growth goes. So they're positive on that, despite what's going on over there in China. Oh, Chipotle was upgraded today. $900 price target. That hit 52-week highs as well today. I can never disagree with Chipotle hitting new highs. They got a new what is that? That new queso coming out or something. I don't know if it's out already, but we'll see if this one does better than the last one, huh? Remember people giving them a hard time on that last one? Do you? Remember that one? Wasn't so good. All right, let's take a look. Well, sorry if I missed any of your questions. You guys may be talking to each other and things like that as well. Economic data coming out in the next few days. Yeah, not tomorrow, actually. There's nothing to go on. If you're interested, the Case-Shiller home price updates came out today. I always look at it. I just want to see where Tampa is the closest area to me that they actually refer to. Tampa, year over year, up 4.71%. That's the 4th biggest gainer out of all the major cities that they cover. New York was down month over month, about 1/3%, and Seattle's down 1.3% year over year. So a little weakness there. And then found it interesting that Tampa has actually yet to recover home price-wise from that big crash, the housing crash, 2008, right? So Tampa has yet to recover. New York has yet to recover. That's interesting. Maybe it's all in New York. It can't be Manhattan. Chicago, Miami. No, it would be Manhattan. Miami, Phoenix, and Las Vegas have all not recovered since the big burst there. How do you feel about that? If you're in any of those areas, do you see that? Seems kind of odd there. And the biggest gainers, actually, since the housing crash there, San Francisco, up 130% since the crash. Las Vegas, up 115%. Detroit, up 100%. I could believe the Detroit one there. They're doing good there. Where's Tampa? Tampa's up 77% since the 2008 housing crash. This is not my data. This is S&P Case-Shiller data that comes out there. So you check that out if you like. I don't know if that's interesting to you. Yeah, there you go. Just people find it. You see the S&P 500 trading sideways for the next week or two, plus a shortened week for Labor Day. Yeah, that'll be helpful. Labor Day, Monday coming up here. I don't know. I see weakness. I don't see sideways from here. I hope I'm wrong in a weird way, but I sort of hope I'm really right. I just see weakness here overall. I don't see any reason why the market would say we're content to move sideways. I see each day people saying we're going to take a little risk off. We're going to take a little risk off. Watch Bloomberg, all the fund managers. We're just going to take a little risk off. We're paring back a little bit here. We're coming out of sectors that have disappointed us and we're going into sectors that have performed. You're seeing that. People wanting to take risk off. I think, unfortunately, last week, Washington lost a little bit of credibility as to what their plans are going forward, and it kind of became known that there's no real plan on the trade war front. Cool. Nice. Sorry if I missed any of your questions there. Thoughts on Activision? I mean, I saw the breakout here today. It's sort of really sloppy, though. I don't know if that's a reason to go chasing into it. But it's nice to see. If you're someone that's owned that stock for a while, your stock has just woken up again. Whether it can perform for you is another question, but at least you know it's woken up and it's no longer dead money. You should find out real quick if people jump on that train to start pushing higher or if people sell into it. And if people sell into it, you know it's basically just stop it. Just go play something else. Philip Morris and Altria, we talked about that. Any thoughts on that? No, from a strategy perspective, nothing, because it's too soon, right? They just made the announcement. All the details are coming out and everything. I know initially Altria was higher. Yeah. Yep. Oh, you guys are talking to each other. All right, sorry, missed it. Anyways, yeah, I think that's pretty much it there. Thoughts on Visa? So yeah, I mean, it's hanging in there. Visa doing okay. I mean, you're obviously happy to own Visa or MasterCard. If you had to own one or two things, you're happy that you've had that. Sort of really weathered through the last few weeks here, all this nastiness, but not bad. Yeah, not bad. Oh, I tell you what, let me see. Didn't I have? Sorry to stall here for you. Just give me a second. No. Yeah, I did cover everything. Okay. Just making sure I'm not losing my mind. You know how it goes. Hey, earnings-wise, you know what's coming up tomorrow. Maxim, by the way, paying out 48 cents. We own that one in one of our funds here. The dividend coming out, so that's good to see. And TSE is taken over for Wage in the S&P 600. I don't know any of you that do that, though. So that's okay there for you. Haven't looked at Equinix. No, I haven't. Not one that I look at there. I wouldn't be the best to help you out with that one. So you're looking for more tweets. Yeah, I can tell you the markets are looking for more tweets, but now they're a little bit skeptical. You can just see the performance, right? If you just measured how much we move up or down based on tweets, now people are starting to move more towards the downside. It's a shame, but we'll see what happens there. All right. I will wrap it up from there. A little bit of a slow news day, but hopefully that gives you enough to go on, and we will be back tomorrow to do this all over again. Got some really cool videos coming out this week for our 1 o'clock show. So if you don't know, on the Jazz Wealth YouTube channel, we do video post, it's a recorded video at 1 o'clock, and then we do this show live at 5 o'clock Eastern every day, and I hope you'll check it out. Enjoy the rest of your day, and we'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.